Good evening. Sound check. How's it going, everybody? Sound is good. Show us your face. How's it going, Trish, Kenneth, Christian, Marco, DM, Jared, Terry, Fritz, Gunter, Julie? Good evening, everybody. Hey, John, George, Pavel, Carl. It sure is. Another Pavel. We got two Pavels in the house. Pavel, clap. I hope I'm not, butchering your name, but you want to see the sexy face of mine? That's only reserved for you, man, on Periscope. How's it going, Rory? Christian? No problem. Awesome. Great, great, great. That is good. Let's get started. All right, one sec. Just gonna wait a couple minutes, see if there's any late comers rolling in, and then we shall get started. In the meanwhile, let's take a look at where's everybody coming in from. All right, let's take a look. Boom. That's awesome. We got people from all over. North America. We got people from Canada. We got people from Hawaii. We got people from Europe. People tuning in from all over the world. Africa, Europe, and Middle East. That's amazing. Good to have you here, guys. Let's get started. I'm not going to wait for people who are late. I want to dive into the material. We got a lot to cover today, and I don't want to waste your time, and I don't want to waste my time. So let's get started. You guys are going to love it. Got an action-packed workshop for you guys, and do stay on till the end. Got a special offer that I'm going to make to you at the end of the workshop. It's only for webinar attendees, so I just suggest you guys tune in. And let's dive in. We got a lot to cover. So before I get started, I want to get a good feel of sort of the audience. So how many of you have traded options before or know a little bit about options? So type in a 1 if you know a little bit about options. Type in a 2 if you don't know what options are. You're brand new to options. Type in 2. And type in 3 if you're like, I don't know where to start. Nice. So I see a bunch of 1s in here. See a bunch of 2s coming in. And a couple 3s. Okay. Awesome. So a lot of you guys have either traded options before or know a little bit about options, and then we also have a good mix of people who know nothing about options. So it's going to be great. We're going to dive into the basics. I'm going to give you the bare bones basics today, at least so you guys are familiar with what options are, and at least you can start incorporating into your plan. My goal with this workshop is to give you guys at least some understanding of options so you're confident about it, and it adds something to your vocabulary. So I'm going to give you that today, and right now I'm going to dive in straight to the material. We've got a lot to cover, and I've got things to do after as well. So great to have you guys here. Thanks for all coming in, and let's get started. All right. So, we've all heard that options are risky, right? You guys probably have heard either on social media or through someone else who's in trading that, options are really risky. You can lose everything trading options, and that, leverage is super dangerous, right? Everybody here online, other trading companies saying, hey, leverage is dangerous. It could be dangerous. It could be dangerous if you don't know what you're doing. I'm actually a big fan of leverage. Without leverage, I wouldn't be where I am today. So, you guys probably have heard options are risky. You can lose everything trading options. That's very dangerous. And to be honest, I heard the same thing, right? And exactly right, Widmer. So I actually heard the same thing, okay? Until I actually started trading them, and I realized that the fact that if you know what you're doing, options are actually less risk on your capital than trading stocks, right? And in this workshop, I'm going to actually prove that to you step by step, okay? So, today's webinar, we're going to cover benefits of using options, okay? We're going to cover how it helps you in your risk management. We're also going to cover how it has a lower cost than trading options, okay? And also the increased reward to risk, and due to that, you also get a higher percentage return on your investments and in your portfolio, okay? So, often people say options are too complex or it's very hard to make a transition. from trading stocks to trading options, and that you have to learn a whole new way of analysis, right? Now, but however, many times you don't even have to change your analysis, guys, right? Just the instrument that you're trading. Now, I always tell my traders that who are new to trading options, do your analysis of a stock, all right? You give me your entry, your stop loss, and your target, as well as what you're really expecting from the trade. Like, is it a day trade? Is it a swing trade? Is it a long-term trade? Like, when do you expect your target to be hit? Okay? Now, in that case, I'm going to trade the option, okay? I'm going to trade the option, and you trade the stock, okay? Now, after the trade is over, let's compare the results. Now, in almost all the cases, I would actually go as far to say in all cases, in every single case, the options trade cost less money, okay? It had less risk, and also it gave a higher percentage return on my capital in every single case, guys. So, in essence, you can actually use your own current strategies, right? You don't even need to learn a new strategy. You can use whatever way you're trading right now. You can use those strategies, all right, and apply options to that strategy, okay, instantly after you gain the basic understanding of the instrument. Now, using options, you are actually still trading the stock, okay, and making a bet on the stock's price, but you're just not buying or selling the stock. You're actually using options to play the stock. Does that make sense? So you're still trading a stock, but you're using options to bet on the price. So that's the whole difference. So you don't really have to learn a whole new way of trading options or anything like that. Okay. So now we're going to cover the basics options, common mistakes and myths people have about options. Now the biggest one is, all options are risky. It's too dangerous. You can lose everything, right? And then some people say options are just too complex. It's just too hard. It's way too complex to trade options. And another thing that I hear going around on social media when I was doing my research, people say, most options traders lose money, thus you can't make any money. Or you might hear them say, most options expire worthless, thus you can't make any money. Now, I just want to get a quick feel. Has anybody heard people say that most options expire worthless, you can't make any money, or most option traders lose money, can't make any money? Has anybody ever heard that? Like, type in a 1 if you've heard that, or if you're not heard that, just type in a 2. Smolin, Richard, Terry, Chris, Ronald, Stephen, Pavel, John. So everybody's heard that, right? So okay, great. So yeah. So see this, guys, right? These aren't myths or mistakes that I'm making for myself. I've heard this going around all the time, right? People say they expire worthless. How are you going to make money if they expire worthless? And I'm going to show that to you as well. And then another one, and this was the biggest one for me because, as you guys know, in school and college, I was horrible at math. Okay, like I literally, I don't want to use the word, but I'm gonna say it. I actually sucked at mathematics. Like, I used to be scared of that. And when I came into trading, and I was like, I'm gonna be an options trader. I'm gonna swing trade on options and all that. People said, no, you need to be really good at mathematics to trade options. You gotta do all these calculations and all that. And that's a myth and mistake too, okay? And we're going to cover that as well. And then also people say, yeah, it might be less risk or something, but you can lose all of the premium that you pay for the option. If you bought a call option for $1.20, you can lose that. You're going to lose 120. You can lose all your money. And all these are myths and mistakes. So in the next following slides, I'm going to prove it to you, like, how are these actually myths and mistakes, okay? So here are statistics. Now, these aren't made up statistics. These aren't statistics that came directly from me. These are actually from CBOE's website. CBOE is the Chicago Board of Options Exchange. It's the premier options exchange. All right, like we have New York Stock Exchange, NASDAQ for stocks. The CBOE is the head of the options trading body. So I got these statistics right off their website. Okay, 10% options are exercised. Okay, so only 10% of options traders. Only 10% of option contracts are actually exercised. If you don't know what exercise is, we'll get to that later. But only 10% of them are actually exercised. 55 to 60% of those options are closed prior to expiration. Okay? So people, you don't have to buy and just hold the option until they expire. You can actually trade options just like a stock. You can buy an option and then you can sell an option. So you don't have to hold it until the expiration date. You don't have to exercise them. So 10% are exercised, 55 to 60% are actually closed prior to expiration. So that only means 30 to 35% of options actually expire worthless, right? And if you go back to the previous slide, you will see here that people said, you can lose the full premium, most options expire worthless, thus you can't make any money, but we just got the statistics from CBOE. That's why we know why not to trust people on social media, why not to trust these education, other companies that tell you all these made up statistics. These are statistics from CBOE's website. Only 30, 35 expire worthless. Okay, so this myth is gone. All right, and all the others myths, I'm going to prove it to you during this presentation. Okay, so the benefits of using options. Okay, the benefits are you can actually just use your current strategies that you use to trade stocks for options. So if you have a way of trading that you're making money in stocks, you can actually just learn options and apply it straight to your current strategy. You don't even need to learn a new style. Okay. The other benefit is that there's less capital investment required. Okay. So you actually need less capital for a stock. If someone wants to, build a portfolio of stocks, you're going to need a lot of money. Okay. However, with options, less capital investment is required. That's the good part. You can start with a really small account and build it up using options. And I'm going to show that to you as well, how I did it. Okay. Another benefit of using options is the higher rate of return. Now, I've got some great slides for you just to prove this point, so I'm not going to delve too much into this right now. And as I already mentioned, it's great for growing smaller accounts. When I started trading and got into options, I started with just a mere $2,000, $5,000, right? And I grew that account and turned it into a pretty big account. So that's a great benefit of, you can trade from small accounts. And due to the fact that there's less money required to trade options, you also get the benefits of diversification. Now, diversification basically means, you're holding a bunch of different stocks, probably in different sectors, so that you're not exposed to one investment. So let's say you're a swing trader or you are a long-term trader. Okay, you want to hold stuff for a couple of days, a couple of weeks. Okay, you want to hold stuff for a couple of days, a couple of weeks, and you can't really do that with a small account. Okay, like if you have a $2,000 account, $5,000 account, $10,000 account, like how many shares are you gonna buy? Let's say you want to bet on Apple, Microsoft, Google, Baba, GoPro, Twitter. With that small of an account, you can probably just buy one company, right? You can probably buy 10 shares, So you can't really do that with stocks. You can't really diversify a small account with that. Whereas with options, even if you're on a $2,000 account or $5,000 account, you can diversify, okay? You can diversify. You can literally open like 3-5 different positions on different stocks and different companies with a smaller account, utilizing options just because of the lower cost, okay? Now, Zane asked a question, do they count towards pattern day trading limitation? Yes, so Ty has got a perfect answer for you, not if it's a cash account. So if it's a cash account, no, okay? In a cash account, you can trade back and forth, it's not a problem. If you're using margin from the broker, yes, then you're limited to the pattern day trading limitation, same as that, okay? Now, another benefit of options is the predefined risk, because with a stock, you don't really know how much you're going to lose, yeah? In a stock, you don't really know how much you're going to lose, yeah? Because you might buy 100 shares of Apple at $113, and let's say you want to, you say your max loss is going to be $112. So if Apple goes to $112, I'm going to take my loss and I'm going to leave, right? You might have all of that planned, but let's say you wake up next morning and Apple's gapping down from 120 to 118, or so you wanted to get out for like $1 per share loss, but you actually ended up losing $2 because of the gap down, and you have no control over that gap, right? Whereas with options, your maximum risk is always predefined, right? If you bought a call option or if you bought an option for $100 or $200, no matter what happens, that's the worst case scenario. You cannot lose more than that, okay? Now, guys, I'm going to dive into this presentation. I'm going to have 15 minutes at the end for your Q&A, okay? So let's keep the Q&A for that, and let's focus on the presentation, okay? So with options, your risk is always predefined. You cannot lose more than what you bought the option for if you're a buyer, right? If you're a buyer of an option, you cannot lose more than that. You can buy a call option on Apple, let's say for $300, and let's say tomorrow, I mean, it's not going to happen, but let's assume Apple tomorrow goes bankrupt, okay? They go to zero. I mean, it's not going to happen, but let's just say it does. It goes to zero. So what's the worst case scenario, guys? I mean, the worst case scenario is you will only lose what you bought the option for. So the company can go to zero, company can go to whatever, but your maximum loss will always be limited to what you put in. Okay? Now, because of that, because of what I just covered with you, that means lower risk. Okay? That means lower risk for you. As simple as that. That means lower risk. All right? And then another benefit is leverage. Okay? And we're going to cover that in the next slide. I want to explain my point a little bit clearly. So, you know, we went over the benefits, we went over the myths, we went over all these advantages, but a lot of you guys are totally new to options as we did the poll, so you might be wondering, what the heck is an option, right? I don't even know what an option is. So let's go over that now, okay? An option, all right, an option is a contract that gives the owner, okay, the right, but not the obligation to buy or sell a given asset at a set price, and that set price is known as the strike price, okay, on or before a set date, and that date is known as the expiration date, in exchange for a premium, okay, and the premium is basically the price of the option, all right. So whatever you're buying the option for, that's the premium. If you're buying an April call option, then April is your expiration date, right? And if you're buying a $30 call on something, the $30 call, the $30 is the strike price, okay? So the option is basically giving you the right to buy or sell that given asset at a set price, but you don't have the obligation. Like, it's giving you the right to buy it, but you don't have to buy it. You know what I mean? So there are only two types of options, okay? Calls and puts. That's it. There's only two types of options. Calls and puts. There's no other type of option that exists in the whole wide world. Calls or puts. That's it. Okay? Now, let me explain. I want to give you guys an analogy or like a little story so that I can explain what an option really is. So let's assume you go to a car dealership. Okay? You go to a car dealership. You want to buy this, you know, brand new BMW M6. All right? You want to buy it. You want to buy a brand new BMW M6. And that your local dealer only has one BMW M6 remaining in stock, okay? It only has one left, and you really want to buy this thing. But you go there, you're like, hey man, I'm really interested in this car. I really want to buy it, but I don't have the money yet. You know, I'm going to get paid. I'm going to get a salary, you know, next month. So next month I can come and buy it. Please hold on to this car for me. And the dealership says, you know, I'd love to hold on to this car for you, but I can't really hold on to this car because there's only one left in this whole town and there's high demand for this car, so I can't hold it for you, right? And you're like, please, you know, can you please do something? I really want to buy it. I'm 100% going to buy it, but I just, you know, I just can't buy it right now. I just don't have the money, okay? So in that case, the broker or, you know, the car dealer might tell you, okay, you know what, let's do this. You give me $500 deposit, non-refundable. You give me a $500 deposit, and I'm going to hold this car for you, okay? Then you can come back after a month, pay me the money, and take this car. I'm going to hold on to this car for you. I won't sell it to anybody. So, okay, you're like, okay, that's great. I agree. So you give that car dealer $500. He takes out a piece of paper, okay? He makes a contract that you paid him $500 to buy this car next month at $30,000, okay? Let's say the car was priced at $30,000. So he drafts up a contract which says the buyer, Mr. John Doe, has the right to buy this BMW M6 next month for $30,000, irrespective of the price, okay? So the price could go to $40,000 next month, but now that you have it under contract, the dealer has to sell it for you at $30,000. So in this case, the $30,000 is the strike price, okay? Is the strike price. Next month is when you're going to buy the car. All right. So that next month becomes the expiration date. All right. Now you paid him $500 deposit. That $500 deposit becomes the premium, right? Which is the price of the option. Does that make sense, guys? Is that a decent analogy? Like, do you guys understand what I'm trying to say? So $500 now becomes the price of the option. That's the premium. Next month you're gonna come and buy it. Okay, so that's the expiration date. You're gonna buy for $30,000. That is the strike price. Now next month, let's say BMW's there's a new James Bond movie. All right. Now James Bond's not really gonna drive an M6, but let's just say a new James Bond movie comes in. You know, he's driving the M6 in there. M6 becomes super popular. It's all over social media. Everybody wants an M6 right now. And that town only, your town only has that one M6. So the price of the car is probably going to go up. The dealer is going to say, you know what? Because of all this demand, the price of the car is now $40,000. But now that you have it under contract, the dealer has to sell it to you for $30,000, even if it goes to 40. Okay. Now it's also possible next month the car could be worth $25,000. All right. In which case, you can come and buy it cheaper. Okay. So that's an option. And there are only two types of options, calls and puts. So example that I just gave you, you basically just bought a call option on the M6. Okay. Now I'm going to explain it again. So call option. All right. When you buy a call option, it gives you the right, but not the obligation, to buy a given asset. All right. So in the last case, the given asset was an M6 BMW at a fixed price, which is known as the strike price. So in the last case, it was $30,000. Any time before a specified expiration date. Okay. So next month is your expiration date in the last case. So the option writer, okay, so you are the option buyer, but the car dealer who gave that option to you, he will be known as the option writer. Okay. Now he has a legal obligation to sell you that asset for the price that you discussed, no matter what the price is. Okay. If you exercise it. So you don't have to exercise it, but if you come in next month with the remainder cash, you can use that option and buy that car. Okay. So in the case of a stock, buying a call option is a bullish bet on that stock. Okay. So put option is totally opposite, guys. It's basically in reverse. Okay. So when you buy a put option, it gives you the right, but not the obligation, all right, to sell a given asset at a fixed price anytime before a specified expiration date. Now, in this case, the option seller has the legal obligation to buy the asset from you at the strike price. Okay, so basically, all you need to know is that buying a put is a bearish bet on the stock. Okay, so again, general concepts. I'm going to simplify this for you. If you believe the stock is going up, you buy a call. Okay, you are set to be bullish on the trade. All right. If you think the stock is going down, you're going to buy a put option. You're set to be bearish on the trade. Okay, so if you're bearish, you buy a put. If you're bullish, you buy a call. And it's just the opposite if you sell options. Okay. Now, pricing options. How is the price of an option determined? Right. So option prices are a result of the application of the Black-Scholes options pricing model, which was, it's the standard for option pricing since 1973. However, you don't need to worry about all of this. All right, we don't need to be a math genius to trade options because, I don't need to know this freaking calculation. I don't even know what this means. It's like a different language. So you don't need to know all of this because now it's, we're in 2016. Everything happens for us automatically in our trading platforms. So the benefit of trading option is the leverage. Okay, so for 10% of the price of the stock, you get about a 70% increase in your money. Like you might be thinking like, whoa, how does that happen, right? How does that happen? So let's dive in. Let's dive right in. All right. So this is a stock chart, right? And this is some stock. You can see it's going up, up, and up. And right here into this moving average, which is the 21 EMA, it's pulled back. It's forming a nice little flag, a nice little buy setup, okay, at the moving average. So let's say you want to buy this stock. Let's compare the trade stocks versus options, okay. So let's take a look. So the price of the stock at that setup is $65.90, okay, $65.90. All right, so in your margin account, so in a typical broker, if you're on a margin account for holding stuff more than a day, you get 2-to-1 leverage, right? So you get 2 times margin. So in a margin account, to buy 100 shares of a stock priced at 65.90, your out-of-pocket expense, the money that's going to be needed, is half of that, right? So you're going to need to spend $3,285 to buy that stock. What is your max loss, right? So your max loss is basically, since you own 100 shares of stock, let's say the company goes bankrupt, stock goes to zero or something. So your max loss, however, is going to be the full price, right? So the stock is $65.90. You buy 100 shares, so your max loss is $6,590, okay? Now let's assume the stock moves up $4 in our favor, right? Yay! The stock moves up from 65.90 all the way to 69.90. It moves up $4 in our favor. So what are we going to make on this trade, right? What are we going to make? We're going to make, we have 100 shares, stock moves up $4 in our favor. We're going to make, as simple as that, 400 bucks. Okay? Now let's take the same trade and assume you're trading it on an IRA account where you have no margin. You're trading it on a cash account. So in this case, your out-of-pocket expense is $65.90. All right? Your max loss is also $65.90. All right, let's assume it goes up the same $4. You're gonna make the same 400 bucks. Okay. However, now let's bring options into the mix. Let's assume I buy a call option. All right, $55 call option, April with a delta of 1. Now in this case, the option price is $11.05. So which basically means I got to spend $1,105 is my out-of-pocket expense. Okay, now you guys might be wondering, how did I get that figure? As simple as that. If the option price is 11.05, okay, simple thing you got to do is multiply it. All right, multiply it by 100. You're going to get this figure right here. Or you can even just remove this decimal right here, and you're going to get 1105. Right? As simple as that. If you want to figure out what an option is really worth, just take the price of the option and remove the decimal. It's worth 1,105. Okay? But what is your max loss in this case? Let's say the stock goes to zero. That would basically mean your call option goes to zero. It becomes worthless. All right? So now your max loss is 1105, what you paid for the option. So you can already see here, guys. So if I was trading it on my margin account, my max loss is 65.90. That's my worst case scenario. If I'm trading it on a cash account, my worst case scenario is 65.90. But in an option account, my worst case is 1,100 bucks. All right, so it's significantly lower than all other styles. Much lower worst case scenario. Now, let's assume the stock goes up $4. We have a call option of delta 1. That would basically mean the option will also go up about the same $4. $3 to $4. So the option goes to 14.75. All right. So now we basically would end up making 1,475. You subtract this. This trade will give you a profit of $370. So you might say, hey, but trading on a stock account I made 400 bucks. Trading option I made 370. So I made much less money. But no. Think about it this way. You put in on a stock account, you put in 6,500 bucks to make 400. On a margin account, you put 3,200 bucks to make 400. Here, you only put in 1,100 bucks to make 370. So in percentage return, in a margin account, you made 12.2%. In a cash IRA account, you made 6.1%. Whereas trading the option, you made 33.5%. All right, that's what I call high percentage return. Okay. That's why when people sometimes doubt me, like, how do I get this percentage return on my portfolio, is because I'm not actually trading the stock. I pretty rarely trade stock. I trade option, That's why I get a higher percentage return than a lot of other people. All right. So now here's another chart. This is probably Goldman Sachs, if I remember correctly. Same setup as I showed you the other time. Now here's something where you guys can actually learn a setup too. So remember the last setup I showed you? Same thing. Stock's pulling back to the 21 EMA right here. You get a nice little flag, right? You get a nice little buy setup, and you would be looking to buy here, right? This is the exact same setup, which I showed you on the $65 stock, and the same setup here. So you guys are learning a setup too today, which is a bonus, right? So this is a different stock, all right? And check out the last slide. This is a different stock, but same setup. 21 EMA, pulling back, nice little buy setup flag, good to go. All right, so let's take this case. So this is Goldman Sachs, as that was correct. So let's take this case. So this is Goldman Sachs, as that was correct. So Goldman Sachs, the stock price rises from 138.06 to 145.06. So basically, the stock went up 5%. Okay. The option, however, the call option on that rose from $8.25 to $12.63. Okay, or 53%, which is insane. So stock went up from 138.06 to 145.06, basically went up 5%. However, the option price increased from 8.25 to 12.63, or 53%, or $438. How did I get that? As simple as that. This option, we remove the decimal, so 1,263 is what it's worth. We bought it for 825. You subtract that, you get a profit of 438.66. Okay. So here's another thing right here. So calculation of option price increase versus stock price increase. Check this out. The option cost us $825. The option increased this much by 53%. However, if we traded the stock instead, 100 shares, we had to put down $13,806. So we put in $825 to play Goldman Sachs with an option. But if you were playing the stock, we had to put in $13,000. Okay, $13,000 versus $800. That's a big difference. Okay. So in this case, in the stocks case, you would have made $900, which is more than 436. Okay. But in this case, you made 6.5%. In that case, you made 53%. Now, what do you guys like better? Do you guys like 53% or do you like 6.5%? I mean, I would take 53% every single day rather than making 5-6% here and there. Okay. Again, as I also mentioned to you earlier, options are great for growing small accounts too. Now, before I get in to the next slides, I want to make sure you guys understand. Is everybody clear on what is an option, what is a call, what is a put? And do you also understand the calculations, how it works, and how it can make you more money in terms of percentages? Do you guys understand? Is everything clear? Awesome. Awesome, great. Great. So we basically now, you're a little confused on how to buy them. Okay, we'll cover all the questions at the end. So we're going to have a little Q&A, but basically I'll go with this question because it's easy. It's simple. You open up your trading platform. So you might have an account with TD Ameritrade, TradeStation, Options House, Options Place. Just open any brokerage account, all right, with a broker. And you go over to the options chain. Right, you can see all the options there, expiration date, strike prices, all that, and you can just buy them there. But we'll cover that. So, do you buy options with at least delta 90 or higher for swing trades? I've heard it's better to spend extra money and not buy out of the money options for swing trades. Well, yes and no. So, I'm a big fan of delta 70 and higher. Right, that's where I like to be. Because if you're delta 90 or delta 90 is me basically. So you guys probably understand why. Everywhere on social media, I'm known as Delta 90. So that's a little signal to you guys. All right. So I like Delta 70, 80, 90, basically because you are going to get pretty much the same money that you would make trading stocks, right? But you'll have to put down much less money. So you're basically getting the same move and the same dollar profit if you were trading the stock, but you just have to put down much less money than the stock instead. All right, so that's one of the ideas. But so now, I covered to you. I went over all these myths. I went over the benefits, right? And I explained it to you how it works. Now, I want to show you a one trade that I made. And options are great for growing small accounts too, guys. So here's an example. You see, this is a stock, MNKD, Mankind. All right, MNKD, Mankind. And at this time when I was trading this was a $2,000 account, guys. All right, actually $1,000 account. Okay, this was $1,000 account, guys. 1,000. This account right here. This is Thinkorswim platform. I had $1,000 in this account. Probably 900, I would say. You know, about 1,000, let's just say. So in this case, I spotted setup in this MNKD. The setup was simple. You see the stock has been going sideways, basing, and finally breaks out. All right, so on the breakout, I buy some call options, and then you see here at the resistance area, it settled in, and it was trying to break out again. So on this breakout, I bought some more call options, and I basically stayed in the trade all the way. All right, all the way. Stock went from $7 to $9. It actually went up to $11, but I ended up getting out when the stock was at $9.50. I got out a little bit early, but check this out. All right, check this out. So these call options, all right, I had 27 contracts. I have 27 contracts of an OTM MNKD call. Now OTM basically means out of the money, okay? OTM means out of the money. So I have 27 contracts of an out of the money mankind call at 30 cents a contract. So guys, here's a little quiz for you to make sure you guys understand how these pricing are calculated. If I bought, I'm going to go back to the early slide first. If I bought one option, call option, which is worth 30 cents, how much did it cost me for that contract, guys? Here's a Q&A. If an option is worth 30 cents a contract, how much was one contract in dollar amounts? How much did it cost me? For one contract only. $30. Yep. Glenn's got it, Lynn's got it, Ben's got it, Steven's got it, Zane got it too. Awesome. So it basically cost me $30 for one contract, right? I had 27 contracts. So total cost of purchasing these 27 contracts was about $810. That's all I put in. I put in $810 to buy 27 contracts. Stock goes up from 7 to 9. My call option goes up too, right? From 30 cents to 74 cents. I sold those 27 contracts at 74 cents a contract for $1,998 profit, all right? Now, my total profit on the trade was $1,188. How did I calculate that? I sold them for $74 a contract, okay, for $1998. $1998, subtract what I paid for them, so I paid $810 to buy it. I subtract that, so I get a profit of $1,188, or 146% gain in just a couple of weeks. Okay, you can see my position statements here too. MNKD, I had these calls. This time they were worth 1,196 profit, P&L. All right, I had open, made 146% within a couple of days. If I had the stock, I would have, let's assume I had a couple things right there. I would have made, I don't know, not much. I would need a lot more money, because if the stock is worth $7, all right, if I buy 100 shares, I can only buy 100 shares, right? I can only buy 100 shares because I had $810 in the account. So I can only buy 100 shares, and let's say I sold those 100 shares from 7 at 9, I would have made $250 trading the stock, whereas I made $1,188 trading the option, all right? And also you got to keep in mind the percentage return, okay? Now, this is just I bought the next month out in that scenario, the next month out. So check this out. This is just one of my spreadsheets that I use for my own personal gain. This is my 2014 results, because I know people never believe me. I used to, before even Live Traders, I used to work for another company, and I used to manage their options trading portfolio, right? And I used to also call these trades in like a newsletter I used to do a long time back in 2014. These are all my personal results because I used to send them to my clients. This is just 2014, guys. Check it out. These are closed trades. These were open trades at that time. The return on that option was 610% that I gave. Losses, profits, everything. Okay, and that's what people were like, "Oh, how did you get that return?" Well, using options. Okay, it's not that hard. And here's some other trade examples. All right, so you see this stock. It's been in a channel, right? Going down, going up, going down, going up. It's basically moving in this range, going down, going up, going down. Finally goes up, but then comes down, and then goes down again, right? And again, bounces right into this line, goes up again, fails at that line, right? So here's what I did. When it rallied back up into this line right here, I thought, you know what? I think the pattern's going to repeat itself. Down, up, down, up, down, up. It's probably going to come down again. So in that scenario, I bought SPY. This is Spider's S&P 500. Okay, I bought the Spider puts. Now puts is a bearish bet if you guys remember. I bought puts near the close on Friday as it rallied hard into resistance. Boom. Next morning, look what happens, guys. The pattern repeats itself. Market gaps down right into the trend line. Okay, so I sold the puts as it gapped down to support. Sold half at the open for 60% gain in one day, and left half to see if there's further downside. Market started to rally, confirmed bullishness, and I got out the back half on the overall trade. Overall gain was about 39% in one day using put options. Okay, entry right here. Bought the put option for $1.69. That would mean $169 for a contract, and I sold it for $274. All right, that means $274. Okay, average exit 236. So percentage return 39% in the next day. Here's another thing. This is another trade called SWN. These are all from I think 2014. I see how this used to be resistance, right? It broke resistance. What happened? This became support. This became support. This became support. And it went all the way up. So next time when it was coming down, and this, by the way, this is a weekly chart. Next time when it was coming down into the support, I also noticed on a smaller time frame a triple bottom. Right? It's finding support. What did I do? Since this is selling off to a weekly chart support and I get an intraday support, I bought the SWN October $35 calls. Now this is the strike price. Okay, I bought them for $1, which basically means $100 per contract. What happens? Same day it starts to move up. Sold them for $1.22, 22% gain in about 15 minutes. Okay, so you basically made $22 per contract. Let's assume you had 10 contracts. You made $220 in a couple minutes. Okay, so that's that. And here's another one. USO oil. Okay, oil. Everybody loves oil, right? Sells off, sells off, sells off. Oh, it's holding support, right? What happens next time? Boom. Again, sells off, but holds this trend line, right? Hold this trend line. So I was like, you know what? Next time it's coming down, I'm just going to buy it, right? Next time it's sold up again to this trend line, what did I do? I got ahead and bought November 34.5 calls for about 93 cents. So basically $93 per contract. And what happened? It started to move up, 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 and up, right? Started to move up. I was like, you know what? They were worth $1.50 in just a couple days, okay? It was worth $1.50 in a couple days. Overall gain, 60% in a couple days. I mean, I think that's pretty good. I don't know about you guys, but that's pretty good, 60%. Here's another example, GMCR. This is the daily chart of GMCR. Again, same thing, guys. So you probably see what setups I like to do, right? You guys can probably see the setup. It's moving in this channel, right? It's already confirmed support twice. It's already confirmed resistance twice. And now we have a nice little kind of a channel, right? It's a little area. So next time it's sold off here, I went to the daily chart. So you can see my trend line from the daily is coming up. It's sold off right there. I went ahead and I posted it in the trading room. I bought October 132 calls on GMCR for $2.10. And you guys can see this is my position statement. Posted in the room at 231. In my own platform, I bought it at 231.01. October 14, $132 calls. I bought 10 contracts, okay, 10 contracts for $2.10, so $210 per contract. What happened? It immediately starts to move up from that support. Sold half, I posted it in the room. Sold half the call option for $3. So back half sold for $3.10. So basically I sold them at average of 3.05, all right? So I basically made $1. On a 10 contracts, I basically made $1,000 in just a couple of minutes. All right, 30 minutes basically. So it was a 45% gain. So you guys see how powerful this is when you really know how to use options. I mean, you can trade basic setups and rack in good percentage gains. Now think about it. Visualize your own trading account growing in this pace. You're making freaking 50% trades, 40% trades, $1, 100% trades, you're making 300% trades. But the worst case is always going to be what you paid, and let's say it did not bounce here. Let's assume it didn't bounce here, went down, it broke the trend line. I would have gotten out immediately. So I paid 210, and let's say it didn't hold support. I would probably be able to get out for $2, So I'm risking maybe 10% in a trade. I'm risking maybe 20% in a trade, but I'm making 50%, 60%, 100%. I mean, it's impossible not to make money. Well, look at the spreadsheet. Okay, just look at the spreadsheet. Look at my gains and my losses here. 70% gain, all right? 150% gain. Look, 85% gain. Lost 10%, lost 40%. That was bad, right? Lost 20%, lost 7%. But look what I'm doing, right? Look at the gains. They're much bigger than the losses, okay? And that's the benefit about these options. Now, here's another example. This is using unusual options activity. And we have in our live trading room, we have our LT news desk, which posts these unusual options activity every day. So check it out here, okay, in the room. Posted. I called it long, but I actually called it long as a stock. So for the room, I called it long as a stock. The hey, RPRX, buy this thing at 910, all right? Put your stop loss at 890. So for a room, I called the stock long, but for myself, I actually played the option. You know what I mean? But you don't even need to trade the option. You can actually learn how to use options and trade the stock. So here's what I saw. In my software, I saw option, right? Someone bought 1,838 call options. Someone bought a big position in this. So that would mean the stock's going to go up, right? You know why? Because if someone bought these almost 2,000 contracts of this stock, and the market maker sold him the stock, the market maker's got to cover his butt, He's going to go out and buy some stock. So you don't even need to trade options. You can actually trade stocks using option data, right? So stock, I called it long. I just traded the stock this day. I bought it here, 910, put my stop loss, 894. Stock went up, boom, immediately to 970. Sold it, So combining unusual options activity with PTS setups, and PTS is the professional trading strategies course that we have. A big call buying on RPRX, bought the 1-minute buy setup or the 2-minute 1, 2, 3 on RPRX and traded the momentum higher. Okay, again, notice the parabolic daily chart right here, which would, make you more comfortable in playing that stock. All right, now here's another one. Yahoo was on the watch list after it sold off into support and the buy zone. Here's what I saw. It gapped down. It put in a higher low. This is something that I teach. It's called an R2G setup. Okay. So in this case, what did I do? I bought the $39 call options at $1.22 per contract on this higher low. And the same day the stock moved up, I sold it for 182 or 49% gain in the same day. All right. Same day, 49%. And that's pretty good. So again, I want to keep it simple for you. Right, because options could be complex if a person doesn't know how to teach them, right? So here's the thing. There are only two kinds of options, guys. Calls and puts. That's it. There's no other type of options. There's no other type of option. There's only two, calls and puts. All right? There are many other option strategies, strip, straddle, spread, butterfly, condor, covered call, a protective put, naked put, iron butterfly, iron condor. There's just so many strategies. However, all these strategies are made out of only two types of options, calls and puts. So all these strategies are nothing but combination of calls and puts. So you might buy a call, you might sell a put, and somehow it creates a strategy, right? But they're all made up of this. So if you truly understand, right, just how calls and puts work, you can understand all these strategies, and you can even make your own strategies once you have the basic understanding of how to actually trade calls and puts. All right. So we have our course. It's called the Options Trading Strategies course. I actually taught it myself live, a month ago. Since then, we've got amazing feedback. It's just been insane, right? So in that course, we have chapter 1 introduction. We cover all this to you. I gave you some of that today for free. Then we cover options 101. Cover what is an option, calls and puts explain, options Greeks explain. We explain to you the option chain, option terminology and strike prices. We also cover with you the options trading strategies. We cover with you trading setups for long, trading setups for short. We cover directional strategies. We cover how to pick strike price, how to pick an expiration, how to use options for day trading, swing trading, core trading, right? We cover with you my own special technical indicators that I use to make and assisting the trade, how to use a put-call ratio. Then we also cover the most exciting chapter, implied volatility and earnings, how to use options to trade stocks in earnings. What is implied volatility, right? Earnings trades. We cover all of this. Picking the right option, when not to buy option. Then we cover the practical chapter. We cover how to actually, so someone asked this question, right? So in this chapter we cover how to actually place an options trade, how to put the trade on, how to manage the options trade, right? Which stocks you can trade options on, the bid and the ask, the direct market access, how much should I pay for the options, right? How to calculate your break-even price, how to trade the option, right? Time decay, when to exit. Okay. Now, before I get into the next stuff, I wanna explain to you something. So if you guys remember the car dealer analogy that I gave you last time, so people say, hey, but does that mean I need to hold the option? No. You don't need to actually hold the option. You don't even need to exercise it. You can actually trade the option, guys. So as you guys saw in the other chapters, you saw what I did. I was buying the option and I wasn't really holding it. I bought the in this case, for example, I bought the October call option, but that doesn't mean I held it till October. I bought it and I sold it. I flipped the option, guys, right? I bought the option and sold the option. So I didn't even need to hold it. How does that work? Simple as that. Just like a stock, there's always people buying and selling the option, right? Just traders like you and me. So how does this work? So let's say you go to a car dealership, okay, guys? We already gave you the analogy. Now let's say you go to a party, okay? Let's make it a little more fun. You're going at a party, you meet this friend of yours, a really good friend of yours, and he's talking about how bad he wants this M6, how much his wife loves that BMW M6, how much he wishes he could have the M6, right? And he doesn't know that you put an option down for it, and he tells you, hey man, I really wanted to buy this M6. I went to this dealership. He said they only have one in stock, but they can't sell it to me until next month because someone's put a deposit down. Man, I so wish I could buy that car, right? But I just can't, right? I just can't. I so wish I can have it. Then you tell him, you know what? Actually, I'm the one who bought the option for that. I'm the one who put the deposit down. And your friend says, oh man, it's my wife's anniversary. I really want this for her. Can you do something here? And he's a really good friend of yours. You say, you know what? I'm going to help you out. I'm going to help you out, but I'm going to need something. I'm going to need to make a little money for my time. So you say, here's the option. I have this contract with me. You can go and buy this car right now for 30,000 bucks. Okay? I bought this option for 500. I'm going to cut you a deal. You give me 800 bucks. I'm going to give you this contract and you can take it and buy the car for my behalf. So now he gives you 800 bucks. You give him the option contract and you're done. You can leave, right? You just basically made 300 bucks for just flipping that option without doing any work. And now that guy can go into the dealership and buy the car if he wants or not buy the car, right? So that's how this works. Yeah, people really do that with cars. Dude, I do that with real estate too, guys. So here's the thing. When you actually learn how to trade options, you're not just learning how to trade stocks with options. You can actually use it in real estate. I've done that so many times in college. I used to buy these, find these properties, go meet the owner, put a deposit down, get it under contract, man. Get it under contract. I used to take that contract, go to some investor, go to my family friends, and say, hey, I got this crazy deal. I can buy this house right now for $30,000, and I put it under contract. And I say, I'm going to give you this contract. Give me $1,000 right now. He gives me $1,000. I give him the contract. He can buy the house or not. I just sold the contract. You know what I mean? So that's how you make money, guys, trading options. So that's how options work. Okay, you can trade the option. You don't need to hold it. So that's what you're going to cover in chapter 5. Okay, we're going to cover time and decay, how to exit, how to calculate everything. Then in chapter 6, we cover risk management. How to decide how many contracts you can buy, how to decide how many options should you trade, how to use the R units for position sizing. You're also going to get a free, my own personal options position sizing spreadsheet. That is insane. It's going to do all these calculations for you. You don't even have to do anything. How to set price targets. And in chapter 7, we're going to cover some advanced strategy. leap options, debit spreads, credit spreads, vertical spreads. We're all going to cover that. Because as you guys know, those of you who've been with us in our swing trading video newsletter, we've actually been calling out options trades as well, which have performed freaking amazing, right? They're just done amazing, right? And in chapter 8, we cover mindset of a trader, psychology, and I'm going to give you my own personal trading plan. So I'm going to give you my own trading plan and my own blueprint on how I trade options. Everything step by step. It's literally as simple as step 1, step 2, step 3. It's an 11-step process that I personally use, and I'm going to give you my own document. Okay, so that's what you're going to get. And before I even get into that, let me show you this really cool thing. Let me quickly share my screen here. I want to show you some comments from one of the members, and let me see if that member is in the room right now. So yeah, Marco's in the room, right? And anybody else from our swing trading newsletter, or anybody else who's taken the options course, let me show you what Marco sent me this a couple days ago. Let me screen share here. I'm gonna see what he said here. All right. So he Skyped me the other day on my phone, and check this out. All right, here's what he said. I bought Amazon call option yesterday. I'm up 20% in 2 days. 20% in 2 days, guys. And check this out, more than that, check this out. After our coaching session on Tuesday, I feel much more secure in what I'm doing. And of course, don't forget, Alta 90% up right now. 90% on those options, okay? And another one, 20%. And more importantly, let me show you this another cool thing that he sent me. He Skyped me in the room right here. 7 R's, right? If you don't know what R means, it means R units, what we're risking. He means 7 R's after our coaching, right? First step on the ladder to 50 R. I mean, that is amazing, right? And I actually don't save all my, I don't actually save what people say. But after we finished the options course last month or so, I had like so many emails. Like some people say, hey, I paid, whatever I paid for this, 2 days made it back, right? 3 days made it back, a week made it back. Okay, which is amazing. And I'm going to share with you. So I'm going to give you guys an opportunity, okay, to be a part of this. I'm going to give you guys the opportunity for a handful of you guys, okay? So what's my outcome for this course? So the outcomes of this course is to help you better understand options, all right? To simplify options trading for you, okay? To give you the practical knowledge of trading options and not just the theory. All right. I also want to give you the strategy that I actually use rather than teaching you 100 different option strategies. Then more importantly, as I covered, I'm going to give you my trading plan or blueprint to get you trading and applying these concepts right away. Okay. So here's my offer to you guys for today. So you sign up today for the options course. You're going to receive video recordings of the options trading strategies course. It's more than 5 hours course. It's probably more than 8 hours, I think. So it's going to be a 5 to 8 hour course. You're going to get more than 100-page manual, all right, that I've specifically designed and made for you guys. You're going to get the manual. You're going to get the option trading strategies course. You're going to get, 1 month free in the swing trading newsletter, all right? 1 month free in the swing trading newsletter, which in its own is worth $97. And then I wanted to do something special for you. So I'm going to give each and every one who enrolls in the course 15-minute coaching session with me. Okay? I'm going to give you guys 15-minute coaching session right with me after you finish this course. I'm going to get on a phone call, we get on a Skype call, 15 minutes to make sure I've answered all your questions in person. All right, so it's a special for the webinar only. Now this is only for the webinar attendees. Here's a special. Usually all of this will cost you $795, and $795 is only for the course. If you add up the swing trading newsletter and if you add up the coaching session, it's probably going to cost you $1,000. Okay, but for today, webinar attendees only, here's a special offer for $497. All right, so I want you guys to click this link right now, sign up, because I think by now you guys have seen the benefits options have to offer. You understand the basics of options. You also understand what options can do for you. Okay, so for now, for the webinar attendees only, here's a link right now. I want you guys to sign up for this course right now, because I mean this is a ridiculous deal. It's $497. I mean, you need one good trade. Okay, you need one good trade, which I'm actually going to help you find as well. I'm actually going to help you find the next trade, which I'm actually going to help you find as well. I'm actually going to help you find the next trade so I can make you your money back and 10 times that. Right? Now, a lot of my coaching students, they're not here right now because they've already taken options. Okay? But literally, guys, when you get the recordings, watch the recording. During the options class, here's what me and Jay told everybody. We told, hey guys, thanks for being here. You guys paid, $700 to attend this course. So I want to make your money back. During this webinar, when we did it, we told people buy USO Jan 2010 calls. All right, when you're 50%, sell it. That's what we told everyone during the options class. Within 1 week, those call options went up 50%. All right, and people ended up making $1,000, $2,000 on that trade, and that's where I got these emails like, dude, that was insane. That's the best return on investment I've ever got. I paid $700 for the webinar a week, and I made $1,000. You know what I mean? Like, it's insane. You're gonna make it back in a trade. So there's nothing right now. So here's what I'm gonna do now, guys. I want to open it up for Q&A. So I have 15 minutes for you guys. I have to leave. I've got 15 minutes for you guys, so I can answer any questions, because I understand there were a lot of questions that you guys asked, but I couldn't get to them all, right? So now's the time to ask any questions. But here's something I want to tell you. This link that I posted for $497, it's only valid for the first 5 people. There are 60 people right now in the room. This is only valid for the first 5 folks. Okay, after 5 folks, the price is going to be $795, and I'm not going to include the coaching session for the next 5 people. The coaching session is only for the first 5 people that sign up. Okay? For the 6th person, I won't be doing the coaching session. You won't be getting the newsletter. Okay? And the price is going to be $795. So if you really want to sign up, you have interest in trading options, I suggest you do that now. Because you're going to do it later, right? Sooner or later, you're going to do it. Right? Either way, you're going to make a decision. So might as well make the decision with more upside, right? Invest in yourself. That's the best investment you can ever make, right? So do you trade and call options in live stock room? Can we join with a course? So in the room, Mitch, in the room, we only trade stocks, okay? Not options. However, once you actually understand how to trade options, calls and puts, you yourself can actually trade the options, because we are making calls on the stocks. I'm going to be telling you, hey, Amazon price target, blah, 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 it's going to go up. Or I might call the stock, but you can actually trade the option if you like, right? I've done that sometimes. But in the swing trading video newsletter, we actually trade options as well as stocks. But my main thing is, once you actually understand how to trade these, you can actually just trade it yourself, right? I'm going to give you my analysis of the stock, and I'm going to give you guys these tools so you're going to be confident and you can utilize options, okay? So interested in the swing newsletter, do you provide options trades too? So Bill, in the newsletter, we provide options trades occasionally, right? But there's always something there, right? I think right now we got a couple options trades open. So there's always some option trade going on. But we give you the stock, entry price, your stop loss, and your target. And once you actually take this course, you'll be so confident you can actually trade option instead of actually trading the stock. Like Marco, Shalom, a lot of these other guys who took the course, they just look at the newsletter. They don't even trade the stock that we're calling. They trade the option on that stock. Just how I showed you right now. You can trade the stock, you can make 5-6%, or you can trade the option, make 40, 50, 100%. So in this course, you're going to learn all of that. You're going to get my own position sizing spreadsheet that I made it myself. In that, you basically put in your entry, stock price, everything. You're going to get all these calculations automatically. Will this be suitable for beginners? 100%. This course will take you from A to Z of trading options. All the way from the basics, all the way till the end. Right? Check this out. Check out this. Table of contents. From introduction to 101 to all the strategies to how to trade earnings, then we get more and more complex. Then this is all practical session. Right? Practical session, how to actually do all of that, how to actually place the trade, how to do all of that. Risk management, advanced strategies, psychology, trading plan review, all of that. Okay, so you're gonna get all of that. It's crazy. So again, review. You're gonna get. Hold on. So any questions before I jump in? If you guys have any questions, now would be the time to ask. I got 5 more minutes for you, and then I seriously have to leave. So I got 5 more minutes of any questions. But here's my offer for attending this webinar. You're gonna get options trading strategies course, more than 5 hours of video recordings. You're gonna get the manual. All right, you're gonna get 1 month free in the swing trading newsletter. It's usually 97, but you're gonna get it free. You're gonna get 15-minute coaching session with me personally. It's not gonna be my assistant. It's not gonna be Liva. It's not gonna be anybody. Personally, we're gonna talk on the phone or Skype. Okay. But as I said, this is only for the first 5 people because I don't have 15 minutes for everybody. So for first 5 people, I'm gonna give 15-minute coaching session. Special webinar pricing, $497 instead of $795. Okay. So here's the link for you guys. Suggest signing up right now so I can see you guys on the other side, and let's make you money. All right, let's make you money. Don't make back your money. I mean, trust me, you're gonna make back your money. You cannot open the link. Maybe it's your PC. Probably Fabio. If you have trouble signing up, you guys can email info@livetraders.net. We can get you signed up. However, let me make it clear. This deal is only for the first 5 folks. After that, it's going to be $795, and the coaching session and the newsletter will not be included. So thanks for attending, everybody. Hope you guys enjoyed it. Hope you guys learned at least something. You might not sign up for the course. That is perfectly fine with me. That's not my fault. That's not your fault. But I guess it's your fault, because if you don't invest in yourself, how do you expect the world to invest in you, right? So on that note, thanks for attending. Great to have you guys here. Hope you guys learned something. If you don't sign up, at least you guys got a basic understanding of options. At least I was able to communicate with you the basics. Even if you don't sign up, that's awesome. Great having you guys here. And have a beautiful evening, all right? Thanks for attending. See you guys later on. Okay? Have a nice one.
Money, 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 money.